The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to this Tuesday edition of Squawk Europe. I'm Steve Sedgwick with Ben Boulos. Richard Gupta will join us as well. OK, these are your headlines. European equity futures point lower as Wall Street comes back online after the President's Day holiday, with the Nasdaq seen well in the red as AI disruption fears continue to loom over markets.
European finance ministers vow to strengthen the euro's global role in the face of new geopolitical pressures, while the bloc prepares to unveil draft laws to protect key industries. A day of high-stakes talks in Geneva as President Donald Trump says he'll be indirectly involved in discussions with Iran, while officials from Ukraine, Russia and the US meet for another round of peace negotiations.
OK, some of the UK data is a bit dull. It's in line with expectations. Some of it is absolutely fascinating. So there you go. So a lot of UK data coming out. The ONS, the Office of National Statistics, says in January 2026, 11,000 fewer people were in payroll employment when compared with December 2025. Not a dramatic change, really. Claimant count up 28.6 thousand month on month. Again, not dramatic as well. This is really interesting, though, and it may be very interesting for all of you looking for interest rate cuts in the United Kingdom. Average weekly earnings were up 4.2% year on year in the 3 months to December 2025 versus the Reuters poll of up 4.6%. Why do I care? I care because the Bank of England cares, because the MPC cares, because there's two reasons why they worry about inflation in the United Kingdom. One is service sector inflation. The other is wage inflation. And if one of those props is eroding somewhat, then that strengthens the case of the Doves, who Ritka will confirm with me looking over my shoulder. I think they were 5-4 with the deciding vote with the Governor's Bank of England vote last time round. So that could move the needle, because that's one of the reasons why they were keeping them flat. So 4.2% versus 4.6% for average weekly earnings. For me, that's the figure of the day so far. Let me have a look, see if there's anything else incredibly exciting for you. Average weekly private sector earnings ex bonuses up 3.4% in the 3 months to December, of course, which begs the question, what's a bonus? Right, let's have a look. Sterling falls slightly after UK jobs and wage data, so just slightly on the dovish side. That's my interpretation. But what about Ritika, who has taken over my baton of sitting there for 2 hours on an MPC day, just pouring through the NPR? Good morning.
Good morning. Yeah, Steve, I think you're right. I mean, especially highlighting there the wages, because the weekly earnings, you mentioned 4.2% versus the expectation 4.6%. That wages has been a key part of this puzzle, and it is really what has held the Bank of England previously from cutting in a big way. But we saw in the last meeting it was a much more narrow split actually than we expected. It seems to be that the Bank of England, they think that inflation is going to be returning to target the 2% by April, and so they're seeing this shift downwards. So they're kind of shifting actually, even though it was a dovish hold, because they're shifting their attention more now to the other side of that equation. That is weaker demand. That is, of course, the unemployment side of the picture as well. And that's what we have seen, kind of more slack in the labour market. And that's now what the Bank of England is probably focusing on as well. And that was interesting because I spoke to Gareth Davies, the shadow Tory minister, and he talked about the labour market and this data, and particularly he was really focused in on the youth unemployment, because strikingly this is where we've seen a concentrated loss actually in the jobs data. I was reading a note from Andrew Wishart, and he was saying that actually explains all of the 223,000 or 0.7% drop in the payroll employment since its peak back in July 2024. So again, I spoke to Gareth Davies this morning and asked him his view on employment in the UK.
The last election, I think unemployment was around 4.2%. It's now 5.1%. Let's see if it ticks up this morning. If it does, or it stays the same level, I think that's clearly as a result of waning business confidence. We saw in the last quarter of last year that construction output has reduced by 2%, services output didn't grow at all, And I think this is just because of the increase in costs for businesses across the country, added national insurance costs, the added burden of the regulatory costs of the Employment Rights Bill. And so it's no surprise that businesses are reluctant to hire new people, and when people leave, replace them. What I really worry about is what's happening in the 16 to 24-year-old category. This is now at 15.9% youth unemployment. There's now nearly 1 million people who are not in education, employment or training. And unbelievably, about 700,000 graduates are going on to welfare benefits. So it's not a pretty picture for younger people, and the government's got to get a grip on making sure that confidence is restored to business so that they can start hiring again, and that they tackle this absolutely phenomenal amount of wage growth we're seeing for younger people.
That was the UK Trade Minister, Shadow Trade Minister, talking, or Business Minister. What is going on with me this morning? But he was talking there about unemployment, youth unemployment in particular. He said above 15%. So that is really sky high. But it was interesting, wasn't it, Steve? Because we spoke to Callum Pickering, Berenberg, last week, and he was talking actually about the overall picture, though, for the economy actually being much more positive than perhaps expected. We even see it with the Bank of England's forecast, actually. And again, seeing inflation turning to target and actually being less concerned now about the inflation picture, focusing more on the demand picture. And maybe, as Callum Pickering has said, maybe that sort of helps the Prime Minister as he's kind of...
I think you're 100% right.
In that turmoil at the moment. Maybe it does some of the job for him.
So dates for the diary for you, not for me, but for you, 19th of March, 30th of April, 18th of June, 30th of July. So they're the next 4 MPC meetings. Are we, just for our viewers now, are we slam dunk 19th of March, we're getting a 25 basis point rate cut? Is that in the bag? You can confirm that now.
Well, a lot of economists still think it's April, right? But I guess the meeting was so dovish that you can see more. You did actually see quite an uptick now for calling for March as being the first cut of 25 basis points, yeah.
It's interesting the point that the Shadow Minister made about the age groups as well. One of our guests last week was making that exact point, that what we're seeing with the disruption from the AI developments is that it is that lower age range that is bearing the brunt of it from those entry-level jobs. But of course, the data doesn't drill down to that sort of detail.
Yeah, the data doesn't drill down to it, but I do think that's a really interesting point just in general when we're talking about AI and the disruption to the labour market, and particularly, as you mentioned there, honing in on the kind of the younger workers, and that's where it's seen to be causing the biggest disruption. Of course, I'll still be waiting for more data on it, but really interesting point.
All right, let's move on. Thank you very much indeed for that, Ritika. Well, the UK Trade Minister, Chris Bryant, is reportedly set to meet his French counterpart in Paris next month in an attempt to ensure UK companies are not cut out of European supply chains as part of the EU's planned new Buy European rules. That's according to Politico, citing 3 people familiar with the planning, and comes with the Business and Trade Secretary Peter Kyle also due to meet officials in Brussels to discuss the issue later this month. Elsewhere, the EU is reportedly planning to force EV manufacturers receiving state support to ensure that at least 70% of the components in their cars are made in the bloc. That's according to the Financial Times, citing draft legislation, which it says would also add new requirements for products made from aluminium and plastics used in the construction sector. The move would mark a fresh attempt to protect the EU's industries from increasing competition from countries including China, of course. Fascinating.
Right, let's have a look at the markets for you. And we're expecting to see slightly softer open across the European markets in the trading session this Tuesday. Investors keeping an eye on earnings, various companies reporting, including Antofagasta, BHP, the mining groups, Intercontinental Hotel Group, EssilorLuxottica. We've also got data releases from Germany on inflation and economic sentiment. And of course, we've just had those UK employment and wages figures. So all of that feeding into the picture across Europe. Let's quickly check on what's happening in the Asian markets, because trading there is slightly thinner given the Lunar New Year holiday. The mainland markets in China, also in Hong Kong, Singapore, Taiwan and South Korea are closed. These are the ones that are trading, though, and you can see the Nikkei feeling the brunt of those weaker economic figures than had been expected for the fourth quarter for GDP growth that was reported on Monday, and the challenge ahead for the Prime Minister Sanae Takaichi. In terms of the day ahead on Wall Street, this is the expected open, all in the red. They head into the Tuesday session. The markets there, of course, had been closed on Monday for the President's Day public holiday. Let's quickly take a look what's happening on the currency markets with the dollar, and there are the numbers for you. Still to come on the show, finance ministers back the euro, looking to increase the currency's international standing as the bloc navigates geopolitical uncertainty. We will have all the details. Plus, Geneva gears up to host not one, but two sets of high-stakes negotiations as the US eyes deals for Ukraine and Iran. And we'll bring you Charlotte's conversation with the CFO of EssilOrLuxottica following the luxury conglomerate's full-year earnings. That's coming up at 8:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
US Secretary of State Marco Rubio has backed the Hungarian Prime Minister Viktor Orban's re-election bid during a visit to Budapest, saying that President Donald Trump is deeply committed to Orban's success. Rubio said Washington's relations with Budapest are entering a golden era, pointing to the personal rapport between Trump and the Hungarian Prime Minister.
Hang on a second. Before you get to the next bit on the read here, if a European commentator said we are deeply committed to either a Republican or a Democrat candidate for either the presidency or state elections or whatever it may well be, wouldn't we be accused of, quite rightly by the way, of interfering in US politics? If Keir Starmer said, I'm just before a French presidential election, I'm deeply committed to Emmanuel Macron getting a third term, which he's not allowed to do, by the way, or if Ursula von der Leyen said, I'm deeply committed to Nigel Farage, which she'll never say, by the way, those words will never come out of her mouth, winning the next election, wouldn't any of those leaders be accused of interfering in the domestic politics of a country?
They would, but
it's okay for the US president to turn around and say, I'm deeply committed to the success of Viktor Orban in Hungary. That's okay.
It's not necessarily okay, but what can the rest of them do about it?
No,
and that's the problem for
just
them.
pointing out perhaps inconsistencies in the US attitude to us commenting on their domestic politics and the president's ability to back a candidate in the Hungarian elections.
But I think, as with everything, this is a president who doesn't abide by convention. You might have said, 6 months, a year ago, how is it okay for a president to put pressure on the central bank to do what he wants them to do rather than what they think is best?
So what's Washington's top diplomat
Well, I'm glad you asked that, because Washington's top diplomat also suggested that Trump would be open to assisting Hungary in the case of future struggles.
President Trump is deeply committed to your success because your success is our success. Because this relationship we have here in Central Europe through you is so essential and vital for our national interests in the years to come. That, if you face financial struggles, if you face things that are impediments to growth, if you face things that threaten the stability of your country, I know that President Trump will be very interested because of your relationship with him and because of this importance to this country, to us, to finding ways to provide assistance if that moment ever were to arise.
Well, it's a busy day in Geneva because it's actually hosting two lots of high-stakes negotiations today, with officials from Russia and Ukraine due to meet for another round of US-mediated peace talks. Territorial issues are likely to be a key focus as Russia calls on Ukraine to cede, to give up the Donetsk region, something that Kyiv has repeatedly said is a red line.
US President Donald Trump has said he thinks Iran wants to reach a deal ahead of nuclear talks between top officials from Washington and Tehran today, also in Geneva. The US President added that he will be involved in negotiations indirectly, stressing their importance. Tensions have continued to rise between the countries, with the US deploying a second aircraft carrier group to the Middle East, whilst Iran yesterday held a military drill in the Strait of Hormuz. Holger Schmieding is chief economist at Berenberg, and whilst Holger, we rely on you for so much about the economics in Europe as well, I do want to touch base on the geopolitics quite a bit in this interview, if I may. What did you make of MSC? For me, I haven't heard it typified anywhere better than one top businessman said to me yesterday. He said, well, the Americans still hate us, but they hate us more politely now, which I thought was ironic. It was witty, but it kind of underlined the fact that Rubio was certainly, how can I put it, politer in his criticisms of Europe than J.D. Vance.
I definitely would not use the word hate, but it's clear the US position has not changed. Marco Rubio is in line with Donald Trump, with the MAGA movement in the US. The US approach to Europe, to some extent, is a bit of a divide and rule approach. Namely, they like to stir up things. They are supporting Hungary very much, as we just heard. And Hungary is, of course, the problem country within the European Union, the one where the leader is closest to Vladimir Putin. That the overall US approach, we don't like the EU, is unchanged, even if Marco Rubio found nice words about what he called the joint history and potentially the prospect for doing things together again. But doing things together again, US, EU, according to Rubio, would have to be largely on America's terms.
Holger, I am a Europhile, despite being separated by the channel, and I want to see Europe unbelievably successful. But the problem is self-inflicted in many cases. I think you and I can perhaps agree that the project just has not moved to unity, to common interests as quickly as it should have done, and still doesn't, despite the fact that we have the remedy there already. Is the main problem our internal intransigence in the EU to move ahead with reforms as dictated by the likes of Draghi and Letta, or are the biggest threats external?
Well, the biggest threat, of course, is external. The biggest threat is Putin, that we in Europe, in the EU, are not writhing enough, fast enough to really meet that threat. That is indeed a reflection of our internal problems, which is partly the slow working of the European Union, where a country like Hungary can water down sanctions against Russia. And it's partly that simply as a multi-nation organization, by nature, we are slow. We are pretty good at building a consensus over time. And that is a reason why Europe over the last decades has basically prospered in a very peaceful way. We are good at resolving conflicts, but we are slow at doing so. So faced with a military challenge, we are not fully writhing to it, and faced with a sudden turn in the US to a very disruptive policy approach, we are gradually getting our act together in meeting the US challenge, but we are too slow for now.
Holger, it's Ben here. One of the big points of contention has been the spending by European nations on defence, and Donald Trump has made very clear his frustration with that. Now hearing the reports in the FT today that Britain's Prime Minister Keir Starmer says the country needs to go faster on defence spending, reportedly said to be looking at how to bring forward those plans to spend 3% of GDP on defence. What is your take on that?
Well, it will be very difficult for Britain to meet that target simply because the budget situation in the UK is very strained. Having said that, it is at least encouraging that even countries such as Italy, France and the UK with fiscal problems are moving towards higher defense spending. Germany, without serious fiscal problems, is in the lead, as it probably should, as being the most powerful country in the European Union. But all in all, and partly thanks to Trump, Europe is gradually rising to the challenge of doing more for its own defense. But again, the emphasis is on gradually and in a fast-moving world that often isn't fast enough. And the result is, one result of that is that the conflict in Ukraine remains unresolved, and that on the battlefield, apparently, the Russians continue to edge ahead slightly because the Ukrainians simply don't have all the weapons they need to really hold off the Russians for good.
One thing that struck me is that so many of the strategists and analysts that we've spoken to over the last couple of weeks have said one of the biggest risks that they see is the unpredictability of geopolitics. Given what we saw from the Munich Security Conference, given that the newly established Board of Peace is to meet later this week, do you see that receding somewhat, those pressures, those concerns, those risks, or do you think we are in for another 12 months of just as volatile geopolitics?
We are probably in for another 12 months of volatile geopolitics, but we have to distinguish clearly between geopolitics and their longer-term economic and security fallout and what it really means for markets and for the economies. We've had a lot of geopolitical news so far this year. The market impact has been modest. We had a very volatile 2025. The market impact has been very modest. Unfortunately, you could say, in a way, here in Europe, we are by now, after almost 4 years, used to the war in Ukraine. It no longer has a major economic impact and a major market impact. An event that could potentially have a major economic and market impact is if a conflict with Iran were to escalate to such an extent that the Strait of Hormuz would be closed to energy shipments for a long time. That at the moment looks unlikely. So I would clearly distinguish. For now, it looks like markets and economies will not be perturbed too much by what happens in geopolitics, but say for the longer term future of Europe, what happens in the Ukraine-Russia conflict, whether we can hold back Putin or whether Putin continues to edge ahead in the long run, that is, of course, extremely important for Europe and beyond.
Holger, there's a lot of things said that aren't ever going to happen, like just in the early days about Ukraine NATO membership. That seems an impossibility, and senior Ukrainians have admitted as much to me anyway. But in terms of EU membership, which I think President Zelensky mentioned at MSC, that Ukraine would be ready by 2027. As much as I have deep empathy for the Ukrainians, my knowledge of the country says that they will not be ready for EU membership for a very, very long time after 2027 for all kinds of logistical and indeed structural reasons.
I think this is not really a key issue. Why? EU membership could theoretically be fast with a transition period in which Ukraine would have to sort out these issues. EU membership fast would be a very strong signal for Ukraine, and a promise that EU membership could come fast would be very helpful in the current situation.
But sure, Holger.
But is that likely with Rubio going to Hungary, going to the man with Orban, who is the biggest stumbling block on Ukraine's way to get closer to the EU? The US seems to basically almost sabotage Ukraine's bid for EU membership.
Holger, have we not learned anything economically this century, that having a country that is economic, and I understand what you're saying about the geopolitics, but and again, I've been to Ukraine many, many times. I was there in 2014, just after Euromaidan. I was in the country when Crimea was invaded as well. So I kind of got a little bit of background knowledge on this one. This country is nowhere near ready economically. From a corruption point of view, and many people could say as well, from an institution building point of view as well. Its borders aren't well defined as well. There's many reasons why this country isn't and won't be ready for EU membership on a fast track in a very short period of time. Have we not learnt the lessons of getting countries such as Greece into the EU when they just weren't ready?
Well, that's a pretty good point. But overall, I would say the EU is also a political project. And again, what we, of course, would need is clear transition periods before Ukraine could fully participate in everything in the EU. The biggest key step initially would, of course, be large-scale admittance to the common market for the Ukrainian economy to prosper in case there is a reliable armistice. And because the Ukrainians want to be part part of the EU so much, the EU would have unusual leverage over Ukraine in terms of corruption controls and the like. My best guess is that because of the leverage which the EU would have, that corruption control in Ukraine, which is a huge issue, admittedly, that could actually work at least better than, say, in Romania and Bulgaria.